Hey everybody, in today's video I'm going to go over how to calculate GDP growth and whether or not the country's in a recession or not. So a good source of data is the Fred website here, so the St. Louis Fed. So if you just type in Fred and GDP, you should be able to find this page. Now it's important that you're looking at real GDP because that's often what is going to be referred to when you're talking about a recession or not, because real GDP factors in inflation. Because otherwise, nominal GDP that doesn't factor in inflation is always going to be higher just because of the impact of inflation. So real GDP takes that into account and will tell us, whether the economy is actually growing when excluding the impact of just simply prices going up. So, like I said, if you just go into Google, type in Fred, real GDP, you should be able to find this page. And then, so obviously you've got the graph in here, but if you're interested in how to calculate it, you can click on this download button here and download into Excel or even CSV if you want to. So I've already gone ahead and downloaded it. And so this is what it looks like. So we've got the period and we've got the GDP value. This is in billions. So the most recent period was, $20.24 trillion. And so when we're looking at the growth rate, we're looking at is this period compared to the previous period. So to get that change, we just take the current value divided by the previous value, subtract 1, and that's our growth rate, 0.32%. It's not a huge amount, but normally it's not going to be that big anyways. The other thing we're going to need to do is annualize this. And to do that, I'm going to open parentheses, take 1 plus this, raise it to a power of 4, because obviously this is 1 quarter. So we're taking it to a power of 4 to represent 4 quarters to see, what the growth rate would be on an annual basis. And then subtract 1 to put it into a percentage. So we've got 1.27, say 1.3% for the most recent quarter. So now what we can do is copy these formulas back up. I mean, you don't need to go back too far, but basically now we can see the different growth rates by the different periods. So you can see this is the early COVID periods where we've got the big lockdowns followed by the big opening back up again. So obviously that's a very unusual, very big swing. So typically a recession's decline defined by 2 consecutive periods of decline. So this was technically a very short-lived recession. The economy was back up into positive territory. Now, technically, if you're going off that definition, there was some debate, last year in 2022, whether the economy was in a recession or not, because technically this was 2 straight periods of negative growth. And so technically that would fit the traditional definition of a recession. However, technically it wasn't called that because, although that's the technical rule, it's only the National Bureau of Economic Research in the US that declares a recession. So that's a group of economists who say whether it's a recession or not. And given that unemployment was low, job growth was strong and all those things, they didn't formally call it a recession, even though the normal indicators of 2 straight periods of negative growth, showed that was the case. And so it was a modest amount, and the economy did bounce back in the next quarter. So that's a bit of a gray area in the sense that it technically was a recession but formally wasn't. But in terms of Excel, in terms of how to calculate whether the economy is in a recession, normally this would be how you would do it. You look at the growth rate if there's multiple periods. So obviously in 2020 there was a brief recession, during the Great Recession of in 2008 2009. Again, there were multiple periods of negative growth, so that was a really clear pattern. You've got 1, 2, 3, 4 consecutive quarters of negative growth. So that's a pretty strong recession there. But if you've got 2 straight periods here where 1.6, 0.6, it's not huge, right? So there is that bit of a gray area in the sense that even though the data might partially support it, it formally may not still be declared as a recession. But if you're looking to calculate the GDP growth rate in Excel and try to do that computation for yourself, go to the Fred website, look for real GDP, then calculate the growth rate, annualize that over 4 periods, and then you can see for yourself. So as of right now, not in a recession. And, unless the next two quarters show negative growth, it's probably not going to be that way anytime soon. So just to give you an idea of where we are right now. So 1.3% was the last quarter. So unless things change drastically in the next few quarters, it's still going to take at least half a year, even if the economy continues to slow down, for there to be a formal recession. So that's how you can calculate GDP growth. Remember to focus on the real GDP, not the nominal GDP. And doing in Excel, obviously, really simple. All you're doing is taking that growth rate and annualizing it and looking at that pattern. So hope you found this video useful, and thank you for watching.